Hello viewers, welcome to my channel. I am Hasham Ali Khan. So far 8 problems I have completed on computing the income from capital gain till the last video. In this video, 2 more problems, 9th and 10th problem I am going to explain you in detail. So if you want the complete knowledge on income tax, watch all the videos from beginning till the end. Don't skip in between and don't join in between. So first of all, be thorough on all the provisions of Income Tax Act 1961 regarding the computation of income from capital gain. The 2 types of capital gain are long-term capital gain, short-term capital gain. Long-term capital gain is taxed at a flat rate of 20%. Short-term capital gain is taxed along with other incomes on slab basis. All these things I have already explained you in the theory videos. So if you have not watched the theory, I suggest you go to the playlist of my channel. Select the subject income tax for assessment year 21-22. Watch the videos on capital gain, then you come to this video. So before starting the 9th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the printout, keep it ready. Take the screenshot of the solution of 9th and 10th problem. Then I'll explain all the points. Now, see the 9th one. Madan Mohan is an employee of a limited company and gets net annual salary of 12,50,000. First of all, the SSC is an employee getting a salary of 12,50,000. He owns a house in Jamshedpur which is used for residence. The house was purchased in Feb 2006. That means after 1/4/2001. So Feb 2006 for rupees 3,51,000. This is the cost of acquisition. During 2008-2009, he constructed one more floor by spending 95,900. This is the cost of improvement. The cost of acquisition and cost of improvement. The cost of acquisition is 3,51,000 and the cost of improvement is 95,900. On 9th May 2020, he entered into a contract to sell the house and received 1,50,000 as advance. As the sale transaction is not completed, rupees 1 lakh is forfeited through a mediator. Then in the month of May 2020, this Madan Mohan has offered for sale for this property and got an advance of 1,50,000. But this advance was forfeited. 1 lakh rupees are forfeited due to non-completion of the sale transaction. According to the provisions of Income Tax Act, if the forfeiture takes place after 1/4/2014, then forfeited amount is taxable under income from other sources. It will not be taken under income from capital gain. So here forfeiture was done in 2020. That means after 1/4/2014. So this 1 lakh rupees forfeited amount is taxable under income from other sources. On 17th August 2020, he sold the property for 42 lakh and selling expenses 2%. So during the current previous year, the property is sold. Consideration received is 42 lakh, selling expenses 2%, and his income from other sources are 9,200. Calculate capital gain and tax liability for the assessment year 21-22 and CII, cost inflation index, for 2005-2006 117, for 2008-9 it is 137 and 2021 it is 301. That's it. So we have to compute the income from capital gain and also tax liability. See here, Mr. Madan Mohan, computation of income from capital gain first of all for the assessment year 21-22. Consideration received 42 lakh given in the problem. The property was sold for 42 lakh. Minus transfer expenses 2%. It is given. The 2% of 42 lakh 84,000. Deduct 84,000, 4116 is the net consideration. From net consideration, we have to deduct indexed cost of acquisition and indexed cost of improvement. First of all, we'll take indexed cost of acquisition. The cost of acquisition is 3,51,000. It is given. But it was purchased in which year? February 2006. That means 2005, 2006 is the previous year. 2005, 2006. So what is the index number for 2005, 2006? It is given 117. Because the property was purchased on February 2006. February 2006 means the previous year is 2005, 2006. So for 2005, 2006 index number is 117. So here 301 by 117. 301 is the index number for the current previous year 2021, and denominator index number of the purchase year 117. So 3,51,000 into 301 divided by 117, 9,03,000 is the indexed cost of acquisition. Now indexed cost of improvement. One more floor was added. When it was added, it is given here by one more floor by 95,000. 2008, 2009. During the year 2008, 2009, 95,900 rupees was spent. So 9,900, 95,900 into 301 divided by 137. 137 is the index number for 2008, 2009. So multiply 95,900 into 301 by 137, 2,10,700. Add up both, 11,13,700. Now subtract. 41,16,000 minus 11,31,700, 30,02,300. This is the LTCG, long-term capital gain. Now it is asking you to calculate the tax liability. Now this SSC is having two incomes, normal income and special income. This LTCG is a special income because there is a flat rate of tax 20%, separately taxable. Apart from this, this SSC is having income from other sources also. First line it is given that the SSC is having income from salary. So how much is the salary income? It is given 12,50,000. So I have taken income from salary 12,50,000. Last line it is given income from other sources 9,200. So I have taken income from other sources 9,200. Now one more thing. The advance money forfeited after 1/4/2014 is 1 lakh rupees, and that 1 lakh rupees is taxable under income from other sources. Income from other sources. So this 1 lakh rupees also added. So total normal income comes to 13,59,200. 13,59,200 is the normal income. On this normal income, slab system will apply. So now we will calculate the tax on normal income. Slab income rate tax. The first basic exemption is 2,50,000 for non-senior citizen. For non-senior citizen, it is 2,50,000. The first 2,50,000 income 250, nil, no tax. The second slab goes from 2,50,001 to 5 lakh. So 2,50,001 to 5 lakh. Income is 2,50,000. 5% is the tax, 12,500. The next slab goes from 5,01,000 to 10 lakhs. The income is 5 lakh. Rate of tax 20%. So 5 lakh 20%, 1 lakh. Now the balance over 10 lakh rupees. Whatever is the income over 10 lakh rupees, that is taxed at flat at rate of 30%. What is the normal income here? 13,59,300. So you take 13,59,200 minus 250 minus 250 minus 5 lakh. That means 10 lakh rupees. 13,59,200 minus 10 lakh. You get 3,59,200. 30%, 107,760. Take the total 2,20,260. This is the tax on normal income. So tax on normal income 220,260. To this we add tax on LTCG. How much is the LTCG? 30,02,300. 20%. So 20% of 30,02,300 comes to 6,04,60. Add up 820,720. To this, the health and education says 4%. 4% of this amount, 32,829. Add up 853,549. The last two digits are 49. To make it 50. So 853,550. That is the tax liability. That's all. This is the end of problem number 9. Now one note. Here you should give, in examination you should write a note. The amount forfeited was after 1/4/2014. So that's why it is taxable under income from other sources. It should not be taken while computing capital gain. That's it. Next, 10th problem. On 14th July 1972, Sri Naidu, age 64 years. 64 years means senior citizen. There are 3 categories: non-senior, senior, super senior. Non-senior means up to 60 years. Up to 60 years, non-senior. Above 60 years but below 80 years. Above 60 but below 80, it is called senior citizen. Over 80 years, super senior citizen. For non-senior citizen, the basic exemption limit is 2,50,000. For senior citizen, the basic exemption limit is 3 lakhs. And for super senior citizen, the basic exemption limit is 5 lakh. That's it. So here 64 years means senior citizen. 3 lakh rupees is the basic exemption. Purchased a house property for 9,100. When he has purchased? In 1972. Very old. The following are the related particulars. Construction of first floor. So after purchasing the house in 1972, he has constructed first floor for in 1998-99 for rupees 75,000. And there is no CII. Cost inflation index was not there in 1998-99. Cost inflation index will start from 2001 to 2002. 2001 to 2002. 1st April 2001. It will start. So before that, no index. Then construction of second floor, 2001-2002, 1 lakh, 100 is the CII. And construction of second floor or renovation of the house, 2002-2003, 1,05,000, 105 is the CII. And whitewashing and painting. Remember, whitewashing and painting is not a capital expenditure, it's a revenue expenditure. That should not be considered while calculating income from capital gain. So simply in working note you write on, whitewash and painting will not be considered. Fair market value on 1/4/2001 is 3 lakh rupees. Income Tax Act says if the asset is purchased before 1/4/2001, assessee can choose higher of the following: fair market value or actual cost. The actual cost was 9,100. The building was purchased, house property was purchased for 9,100 in 1972. And first floor construction was made in 1998-99. These two amounts are before 1/4/2001. So we ignore. We take the FMV. What is the fair market value on 1/4/2001? 3 lakh. So this 3 lakh rupees will take us cost of acquisition. And the expenditure incurred before 1/4/2001 will be ignored. 9,100 will be ignored and 75,000 rupees will be ignored. We'll take only 3 lakh. During the previous year 2020-21, the property was sold for 48 lakh. This is the consideration received. And selling expense are 1.5%. And advance received is 70,000. It is not forfeited. Simply it is given advance received. So it's a part of the consideration. This 70,000 is a part of consideration of 48 lakh. So at the time of signing the agreement, 70,000 rupees are paid. Remaining amount, that is 47 lakh 30,000, that will be paid afterwards. So this advance money received, nothing has to be done. Ignore. We should not consider this advance money received. Compute income from capital gain and tax liability if income under other head is nil. No other income. The SSC is having only income from capital gain. That's it. Now, Sri Naidu, age 64 years, senior citizen. Consideration received is 48 lakh. Last line it is given. And selling expense are 1.5%. So 1.5% of 48 lakh, 72,000 will get. Deduct 47,28,000 is the net consideration. From this, we deduct first indexed cost of acquisition. So, we'll take the FMV. The fair market value on 1/4/2001 is 3 lakh. That 3 lakh will take into current year index is 301, and the index number for any asset purchased before 1/4/2001 is 100. So 3 lakh into 301 by 100, 9 lakh 3,000. Indexed cost of acquisition over. Now indexed cost of improvement, second floor construction. First floor construction index we should not take because first floor construction was made before 1/4/2001. So ignore. Second floor construction. So indexed cost of construction, second floor. So 1 lakh rupees are incurred and index number is given in the problem as 100. So 301 by 100, 3 lakh 1,000. Now indexed cost of renovation. So renovation amount is 1 lakh 5,000 given there. So renovation 1 lakh 5,000 into 301 divided by 105. Index number when renovation was made. So 1 lakh 5,000 into 301 divided by 105, you get 3 lakh 1,000. Now take the total. 9 lakh 3,000 plus 3 lakh 1,000 plus 3 lakh 1,000, 15 lakh 5,000. Now deduct. 47 lakh 28,000 minus 15 lakh 5,000, 32 lakh 23,000 is the LTCG, long-term capital gain. That's all. We have computed the capital gain. Now we have to find out the tax liability. Computation of tax liability. He don't have any other income, only this income. So 32 lakh 23,000 minus basic exemption. Because the SSC is a senior citizen, so basic exemption limit is 3 lakh. Deduct 3 lakh. Taxable LTCG is 29 lakh 23,000. Now tax on LTCG. 20% of 29 lakh 23,000, it comes to 5 lakh 84,300. This is the tax on LTCG. To this we add health and education as 4%, 23,384. Tax liability 607,984. Now we are rounded off to the next 10. Last two digits are 84. So make it 80. 4 rupees you ignore. So rounded off 6,07,980 is the tax liability. That's all. So we have computed LTCG, we have computed tax liability. In working note you can write on the SSC is a senior citizen, so the basic exemption limit is 3 lakh. Just now I told you. In examination you must write the notes, then only you can score the marks. Then the amount spent on construction of first floor should not be considered because it was occurred before 1/4/2001. Any expenditure incurred before 1/4/2001 should be ignored because we have taken FMV on 1/4/2001, fair market value on 1/4/2001. Then when FMV on 1/4/2001 is selected, the cost incurred on acquisition and improvement made before 1/4/2001 should be ignored. Just now what I told. These points you must write in working note. Then whitewashing painting is not a capital expenditure, so ignored. Advance money received is a part of consideration, so it should not be considered. The advance money received, that's a part of the total sale consideration. It is not forfeited. That's why it should be ignored. So in this video I have explained you two problems, that is problem number 9 and problem number 10. Inshallah we'll continue the next problem in the next video.